Hello friends, this is Raj Sastri from Raj Option Trading. Today is January 6, 2021. Let's take a look at market action today and see what stocks we can buy tomorrow. So with that, let's jump in and get started. As you see here, we got major indices here. S&P 500 is kind of staying flat as you can see here. So we have a compression range here, tight trading range here. So it's staying within the range right now. And as you look through here, Nasdaq, same story. It's also in a tight trading range right now. It's trying to see where to go from here. I think this choppiness will continue. There will be some more up and downs and turbulent market going forward. And then we got here Dow Jones Industrial Average. It's also trying to be in the trading range as you can see here. The moment you see these type of trading range, you got to be a little bit careful because it typically tries to go out of the trading range. If the market is weak, it can go really lower. That's why we got to be careful here. And as you can look through here, Russell 2000 is already weaker a little bit. It's also in the tight trading range here, so we got to be careful with Russell also here. So with that, the theme of the market is really it's turbulent market. It goes up and down violently, and off late it's been going down. So that's why you got to be careful. So typically there is a chance it might break below this trading range, in which case you could face some more turbulent market. And be careful, have some cash on hand, and buy as stocks go down slowly. No need to rush. So with that, what we'll do now is we'll look at few stocks and then go from there. All right, so let's look at major stocks here. Let's start with the big names. So we got Apple here. As you can see here, Apple is coming down nicely. So look here, Apple is in the trading range as you can see here. Came down today also around $3 as you can see here. And then you got Microsoft. Microsoft is now in the buying territory. You could slowly start buying Microsoft. No need to rush, but I think it's good to buy couple of shares here and there and accumulate a nice position. Given Microsoft has got lower RSI as you can see here, just 35. And for those of you who are daredevils, you could easily sell some put options in Microsoft here. Given IV percentile is very high, 73 here, you could sell all the way below current stock price and make some good money. Given there is a high IV percentile for a stable stock like Microsoft. And then you got Amazon.com here. This is weaker as you can see here. Amazon is going down drastically. So I think anytime Amazon goes down like that, it'll always manage to come higher. I've been buying Amazon slowly in this downturn. I think it's going to be good. I've been doing this for a long time. All these drops, I think it's a good one to buy slowly. It's a very good buy at these levels. Look, RSI is very low for Amazon. It's just 37 here. And then you got Facebook or Meta. It's one of the stronger candidates here. I would think it's good to buy Meta. Mark Zuckerberg want to own this whole metaverse. I think it's a very good play here. Look, Facebook is going up today. Despite a market slowdown, it's going higher. So Facebook is a very good stock to buy, but on the down day, it's not a day like today. So with that, let's look at a few more here and then go from there. All right, so now we are looking at a few more here. Let's look at Google. As you look through Google here, barely came down as you can see here. Google is a good buy. I would say it's good to buy some Google at these levels here. Look, Google is also in the trading range here. RSI is 33. That tells you it's oversold here. And IV percentile is high. You could sell some put options way below and make some money that way too. Netflix, on the other hand, as you can see here, it's breaking down. So Netflix could be a good buy at these levels here, but you got to be careful with Netflix. It's below its I think it's 200-day moving average. So you got to be careful with Netflix here. If you see a sign of stabilization, then you can buy some Netflix. But right now it looks like a free fall here, so we got to be careful. And then we got here Nvidia, one of my favorite stock here. It's also coming down nicely. It's trying to go higher. That tells you Nvidia has got some strength here. It's good to slowly start buying Nvidia and go from there. And AMD is in the same category like Nvidia. It's also a little more stronger here. Both these stocks are sold off with the low RSI at these levels. I would be slowly buying these companies and accumulating a nice position, because these are the stocks that are going to go much faster, much higher as market bounces back. That's why it's good to buy a couple of shares here and there on the down days and accumulate a nice position in these quality stocks here. So with that, we'll jump in and look at the ETF action. So let's go into spreadsheet here with the ETF and go from there. So from an ETF perspective, as you can see here, we got these major ETFs here. Let's make it a little bigger here. There we go. And let's also sort this by volume on the top here. All right, so we got highest volume on the top here. As you see here, we got S&P 500 down today, but as you can see, it's almost at the top. We got to be careful. It's just 2.5% below its one-year high. So even though there's a panic in the market, understand S&P 500 is still at the record territory, just a stone throw away from its record territory. That's why you got to be careful here. There may be some more downturn coming our way, with Fed acting a little more hawkish of late. And then you got your QQQ or Nasdaq. It's a little more weaker, as you can see here. This came down nicely in last 5 day and 10 day. RSI is still high, 52 at these levels here. Sorry, IV percentile is 52, but RSI is 42. So it's I think it's in a buying level right now. But still, as you can see here, it's just 6% below all-time high. I think for market to really go higher, it has to at least have a 10% correction. Then we can, then it can make its way higher. Money from the sidelines will flow into these names. IWM is already in a correction territory right now. It's down 10% from all-time high. So there are some great low cap stocks you could buy and go from there. So with that, Dow Jones Industrial Average also, as you can see, are just stone throw away from all-time high. So there may be some more drop coming our way. So that's why we got to be careful here. On the other hand, if you look at IYT here, Dow Transports, that's going higher. Typically, when Dow Transports goes higher, that tells you there is a leg to this uptick here. But today, Dow Transport did not do much here, so we got to wait and watch. If it jumps higher, then it's a good story. But right now, it's waiting and watching what to do next. So with that, what we'll do is we'll look at category 2 here and look at a few more names here. So in the category 2 here, we got some of the financials and real estate type stocks here. Let's also sort this by volume on top. All right. So as you can see here, we got highest volume in the XLF or financials. So nice volume. Financials went higher today. That's a good news here. So some of these banks will make money if the interest rates goes higher. On the other hand, as you look through here, utilities are going down here, down slightly. Typically, this happens when the bond itself, the yield goes higher. Look, yield is almost positive here. That's why XLU came down here. And Bitcoin is down, as you can see here. Bitcoin is a great buy here. I've been buying slowly some of the favorite stocks like Marathon, BT, and Riot Blockchain. Those are good ones to slowly accumulate. Right now, sky is falling. Everybody's worried about Bitcoin. That's when you have to buy slowly. And you could also buy actual Bitcoin and Ethereum at these levels too. And then finally, we got real estate. As you can see here, IYR real estate is also weaker here. As the interest rates goes higher, some of these refinancing and home buying activity might cool off here. That's why it's panicking a little bit. So it could be good to slowly buy, but let's wait a little more. Right now, RSI is 48. It's just 4.5% below the all-time high. So it's good to wait a little bit and then start buying IYR. And now let's look at next category here and go from there. All right. So next we are talking about XLP. As you look through here, XLP is a little bit defensive type sector here. It's also going down, as you can see here, down just 0.3, barely down, not too much. Healthcare is down and gold is down, so we got to be watching out these sectors here. Gold is still RSI 53. I think it can go some more lower for us to buy, but consumer staples is high right now. I would not be buying those stocks. It's good to buy some beaten down stock versus stocks going higher. If you buy stocks that are going higher at this time, you might feel good at the moment, but those stocks may not do well in the longer run. So with that, let's look at a few more categories here and go from there. All right. Now we are talking about high risk type stocks here. We got IBB biotechnology down nicely, as you can see here. There are some good stocks you could buy at these levels in the IBB here. Then you got SMH or semiconductors. Semiconductors also in a good territory to slowly start buying here. RSI is 48. As you can think about, we got Nvidia, AMD going higher. That tells you SMH or the semiconductor can go slightly higher here. And then got XLK here. XLK is doing not so great, as you can see here. RSI is 41. It's good to start buying some of the favorite technology stocks and biotech stocks and go from there. And finally, XLY, consumer discretionary, that's also going down slowly, but it's almost at the top here, just 5.7% below the all-time high here. So there may be some more pain to come. So think about your favorite names like Amazon.com, Home Depot, and Lowe's, and some of those are in this sector. You could slowly start buying when they come down. So with that, what we'll do next is, we'll jump into the stock market here and see what's trending in the stock market and go from there. So let's go in here, and what I've done is I've looked at all the stocks here where volume is greater than 1 million shares traded, and also sorted by 1 day performance here. As you can see, a stock at the top has lost the most in 1 day. The top one here is no surprise. Many of you asked what's going on here. Let's just make it a little bigger here. All right. So many of you asked me what's going on with the Berkeley Lights here. I think Berkeley Lights at these levels, it may be okay to slowly start buying. There is a CEO change here. I think stock has fallen through the crack big time here. They don't have good financials, as you can see here. Financial, they're getting a C here, but it could be okay to slowly start buying as a contrarian here, and go from there. Let me also do one thing. Let me just remove this here so you can see some of the statistics on the other side here. All right. So as you can look through here, Berkeley Light is a good, it's a speculative play here. If you're up for speculation here, since the stock has dropped so much, you could buy, but understand it's pure speculation. There is some fundamentals, as you can see here. It's a nice sales growth here in 1 year, quarter over quarter, also good gross margin. But look what's going on in the stock here. It's been down for 1 day, 5 day, 10 day, 1 month, 1 year, and down 90% from 52-week high. So if you're a contrarian, you could put some money to work here. I've seen Berkeley Lights going higher on this short squeeze type situation here, but otherwise you could pass on this one here. And we got a few more, as you can see here. As you look through here, look for stock with a nice quarter over quarter sales growth and gross margin. Those are the good ones to buy slowly. We got one more here, Curis or Chris. As you can see here, very low price stock. It's also down big time, as you can see here. And this does not have a good, finance and growth right now. It's grade D here. And we got a few more, as you can scan through. So what we'll do now is we'll look at a little bit high price stocks here, stock price greater than $10 to begin with, and then we can look at the low price stocks a little bit later. So with that, what we'll do is we'll look at price greater than $10 here. All right, so we'll also highlight a few things here. We'll say we want positive gross margin, and we want low RSI, so that we can look at stocks that are sold off here. And we can also say I don't like too much debt ratio at this situation here. Let's say we want low debt here. Let's say we want let's bring this up here. We want low debt here. There we go. So we got that also taken care of here. I think now we are looking at some stocks we can slowly buy. At least these names have got nice situation going on. And what we'll also do is we'll say we want a low price to sales ratio. We can get rid of some of those names here. Let's say price to sales ratio less than 10. So we can get some good names here which are valuation perspective not sky high. There we go. So we got a nice short, nice valuation also here. So these are the names we could slowly look and go from there. And let me also make it smaller here. All right, so we can look at some of these names and go from there. Look, we got names like eHealth here. This used to be, very high price stock while ago. It came down drastically. Right now, as you can see here, we got there's no sales growth yet. Probably we could ignore the stocks with no sales growth. Let's say we want positive sales growth here, quarter over quarter. There you go. So now we are getting even stronger candidates, as you can see here. Some of these can work for us. We could, buy some of these names here and go from there. Let's also remove this so we can look at some of these a little more better here and go from there. Look, all these stocks have fallen off drastically, and many of them have got nice sales growth and nice gross margin, as you can see here. Valuation is lower. As you can look through price to sales ratio here, much lower. So you could take a look at some of these names here. I love Take-Two Interactive, which is a great video game play here. As folks are stuck at home with the Omicron, this stock can go higher. As of now, it's down 23% from 52 week high. And also, as you can see here, valuation is just 6, which is okay, not too bad here. And it's got nice, it's got okay sales growth here and nice gross margin. And then you got a few more here. If you're up for silver, we got PAS here. It's a good stock here, doing nicely, as you can see here. It does not have too much performance here, but it could be a good hedge as we go forward. And then you got a few more here. I love HZNP also, Horizon. It's a good one. As you can look through nice sales growth and gross margin, you could look at this one too. And we got a few more like Darling, which is a good one too. You could look at that one too. And Teledoc, we could probably pass on at this time, let it come down a little bit. But we could look at KB Home here. It's a great stock to buy, and we could look at that one too. And we got 3D Systems, also good stock. You could buy that one too. And all these names are good ones. You could slowly start buying them, given PS ratio, price to sales ratio is low here, and all these stocks have got low RSI, as you can see here, which tells you these stocks are sold off here. You could start buying them slowly and go from there. And next, what we'll do is folks always ask me, hey, you know what? How do I know what stocks will go higher? And tell me what stock has gone higher in 2018. So we'll look at that in a minute here and go from there. So before that, let's also do one more thing here. Let's look at stocks with a high short ratio. That will give you an idea what stocks are being pushed down by these short sellers. So with that, let me jump in here and look at high short ratio candidates to begin with. All right, so let's sort this by high short ratio. Let's get the high short ratio candidates on top here. All right, so these are the stocks with the high short ratio. Let me also remove the price here so we can look at even low price stocks to begin with, so you can get a good idea. Then we'll put the filter on here. All right, so these are the stocks with the high short ratio, as you can see here. Still have got nice gross margin, nice sales growth. Keep watching the short ratio here. Let's see, very short ratio. All right. Look, let's sort this by short ratio. Highest short ratio on top here. All right, now we got the highest short ratio on top here. Some of these names may not be suitable for everybody because these are some of these Chinese names on top here. But take a look at this. Some of these names have got high short ratio, and all these stocks have got nice sales growth and gross margin, and all these stocks have got low price to sales ratio. That tells you valuation is low. So you could look at some of these names here and go from there. For example, we got GameStop. There is some news around GameStop here. They want to go into some of this NFT type play here. Stock went higher. Still nice high short ratio here. And you could look at other names like Stitch Fix is a good one. You could slowly look at that one too. And you could look at other names like Livent here. It's a good lithium play here. A high short ratio. You could also buy there slowly and go from there. So with that, what we'll do is we'll go into a next chart and see what worked in 2018 and see if some of those things can work now. So let me switch here and go into a different spreadsheet here and go to market correlation spreadsheet here. As you can look through here, what I've done is I've looked at all the stocks which have dropped down big time today. Let's make it bigger here. As you look through here, all these stocks have dropped down big time today. And what we can do is instead of looking at stocks drop down big today, let's let's actually sort this by what stock went up in 2018 and go from there. So with that, let's sort this here. So I want to sort this by all the stocks that went higher in 2018, largest on top, and go from there. We can take a look at few names here and go from there. So with that, what we'll do here is we'll skip some of these names. Some of these names are not there. By the time 2018 was, it's a couple of these are new stocks. So let's jump all the way to down here and look at what worked in 2018. All right, let's keep going down. All right, now we are getting somewhere. Let's go slightly higher. So as you can look through here, we got few names. We got few of these small cap names like Bimi. I would probably skip here. It could be a one time hit here. Did not do well as you can see here after 2018. But look here, we got Tandem, which is a which is again a diabetics type device play here. Continuous glucose monitor, as many of you might be knowing. Stock had done nicely in 2018, and it also did nicely in 2019, 2020, 2021 also it did well. And right now, as you can see here, in 1 month it's done 2.3% already, and it's giving back some right now. And as you can look through here, RSI price to sales ratio is 13. So this could be a good one. I think it's a little bit pricey from a PE ratio perspective, but if you get price to sales, still expensive. But if this stocks gets hit, you could buy some Tandem Diabetics here, given it's got a nice track record. As you can see here, look, Tandem Diabetics have done nicely in 2018, 2019, and 2020, even in 2021. So you could look at that one. And as you scan through here, take a look at one more here, Arrowhead Pharma. This also looks like it's done nicely in 2018, 234%. Some of these biotech stocks are hit and miss at times, but this seems to be doing consistently well in the past, even though in 2020 it's trying to think where to go here. And then you got few more names that have done nicely in 2020, 2018 here. Look, we got let's look at a little bit high price stocks here. Some of these very low price stocks will be one hit wonder at times. So let's keep going a little bit lower here. All right. So we got one more here. As you look through, keep watching. We got Insigo. Insigo is a low price stock. It is done nicely in the past, but right now it's struggling. So I would probably skip that one for now because it's really struggling at this time. Look at Trade Desk. Trade Desk could be a good one here. They got a nice platform for advertisers. Look, it's been doing consistently well. 2017, 2018, 2019, 2020, even 2021 it's done okay. And 2020, right now 2022, it's down slightly here, but PS ratio is a little higher. So if this stock gets hit, you could buy some Trade Desk here, given it's got proven track record over past couple of years, including 2018. And then you could look at probably On Track is a small stock here, just $4, but looks like it's done nicely here. And let's look at Okta here. Okta has done nicely in 2018, as you can see here, done about 141% in 2018. Right now, it's got a little bit high PS ratio. I think if these stocks get hit, you could buy some Okta on a sale. This will also do nicely. And as we look through here, we got a few more which have done nicely. We got Power Tech here, which is a $50 stock here. It seems to be it's done nicely, as you can see here. But 2021 is a not good year for Power here. It's also down in last 1 month about 3%. But if the stocks get hit, you could buy some Power. This can also do well. It's done nicely in 2018 here. And then you can scan through here. We got a few more here. AYX Alterisk, it's struggling right now, as we all know, with but it's done nicely in 2018. We could look at this one also. If this gets hit more, you could buy some AYX here and go from there. All right, so let's keep looking few one or two more here, and then we can end the day here. Look, we got Dexcom here. Dexcom is a winner. As you look through Dexcom, it's done nicely, as you can see here. It's got a nice grade from Morningstar here. A grade in the financials, A grade in growth, and profitability is F right now, but it's a nice one. Look, it's done nicely in 2018, 2019, 2020, 2021. Now it's a little bit down, as you can see here, in 1 month down 7%, and it's got a PS ratio a little bit higher. If this gets hit, I would say go buy it. It's a good one to buy. And as you can scan through, we got a few more you can look at. A Silvercrest $7 stock here, looks like that's done great. You could look at that one too here. Look, it's done pretty okay here. Off late is struggling, as you can see here. 2021 down big time. Looks like silver stocks are not doing great right now. Good to buy some and go from there. And as we look through here, we got a few more here. Look, we got EVBG here. It's also done nicely, as you can see here. You could pick up some of these names here on this downtick and slowly accumulate. Look, this is given back so much in 2021, 54% in 2021, and right now in last 1 month it's dropped so much. So you could pick some of these up here and go from there. And we got Atlassian here, team. It's again a software company, as many of you know here. It's done nicely in the past. This year, last month, it's dropped off by 10%. You could pick up some Atlassian if it gets hit. Right now, as you can see here, PS ratio is high. I would say wait, let it come down. Then you can buy this one too. And probably will stop. We got Serapto. Serapto is one of my favorite stock here. It also done nicely. You could buy some Serapto also here. And we got a few more, as you can scan through here. I would say look at some of these names and buy them slowly on the on their way down here and go from there. Let's keep going a little bit lower here. There are some great stocks. All these names have done nicely. Keep watching 2018 here. The moment you see a consistent winner, I would say go after that one. Even this stock here, SPSC, look, this has done nicely here. A nice grade from Morningstar. Looks like it's done nicely. I think you could look at that one too here. PS ratio is a little higher, but I think it will do well too. So with that, let's look at few more here and look at the names which have consistently done well. Even Novacure, I think it's a good one. You could look at that one too. Dropped off big time in 2021, but has done nicely in the past. All right, so look, we got one more here, Fortinet, which is one of my favorite cybersecurity play. If this gets hit, you could buy some Fortinet here. It's a great one to buy, but right now, as you can see here, a little bit high PS ratio, but this stock has gone higher in 1 month. Even today, it went high. So Fortinet is a winner. If this gets hit, you could buy some Fortinet and go from there. All right, so let's keep going. Okay, we got one more here, Fox Factory. I was Fox Factory. Yes, it's done nicely as you can see. Right now, it's $161. This also had done nicely in 2018. You could buy some Fox Factory here into the downturn. Right now, I think it's down 8.8% in 1 month. You could look at that one too, and go from there. And we got a very small price stock here, LTRX, $7 stock. Look, it's done nicely in the past. Even 2018, it's done nicely. You could look at that one too. Very low price stock here. Only thing is from a profitability perspective, it's F, but that's okay for some of these names here. You could take a look at that one too here. And we got few more here. I will see if there is anything significant here. Even MEDP, that's a good one here. MedSpace, you could look at that one too. So with that, what we'll do is we'll wrap it up here. So I just wanted to give you a flavor here of some of these companies here, so that way you get an idea on what stocks you can look at and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.